Morning all, how are we doing? How's everybody this beautiful Wednesday? Good morning from Pontevedra, Spain, isn't it? Blue trader. Cloudy, pretty much the same here. Might as well move to England. Morning, Danny, Michael, JC, Peter, Tom, how's everybody? Virginia, Kennelly, Jenny, Jerry? Can't talk this morning, something's wrong. In a minute. Morning, Burke. Jerry. We just said that. Morning, Andres. Right. Let's have a quick look at what we've got going on today. Sec. There. So the DAX gap fill underway at the moment. Very small gap this morning. I expect that will be done by the open. We've moved up into this gap fill area that we were targeting from last Friday. So looks like that's going to get done today. Gap fill to the downside was completed yesterday. So target is up at 100 to 125 ADR today, potentially for that second gap fill. So possibly looking at longs today. But obviously today is going to be dominated by CPI. So we will see what happens at the open. But I think we might have a little bit of possibly a rotational morning this morning, but we will see. So news today, obviously the big one is CPI this afternoon for the US dollar. That will determine obviously what goes on with the US dollar this afternoon. We've got the Bank of Canada's rates this afternoon as well at 3 o'clock, half an hour after the market open. This morning, we've had the New Zealand dollar rates, which came out as expected at 5.5. Not a massive reaction off the Aussie or the New Zealand to that, which is nice because last time we got a huge dump on the New Zealand dollar, which went on for days. So they haven't done that today. Bank of England got Bailey speaking at 9 o'clock. Unlikely he's going to say anything that he hasn't said on Monday or Sunday. It's just going to back up the fact that we're having a 0.5% rate increase next month, I should imagine. So, yeah, big day for news today. It's impossible to tell what's going to happen to the market today. What normally happens on a big day like this with CPI is you tend to quite often get a rotational day in the morning as London sits and waits for the news. As soon as the news hits, they can pick a direction and then things start to move. The difficulty today is we've got obviously that news followed by another potential big mover there. And obviously 4 o'clock is the press conference. So we might have a day where we sit around and just spike a little bit and then it all kicks off and moves tomorrow. But we'll have to wait and see. Nothing much we can obviously do about it. We are on the train and we will go where we are taken. So that's today's news. Overnight, nothing much really. We had the Lowe speech as well after the New Zealand dollar. So Lowe was speaking for the Australians after the New Zealand dollar rates. So not a lot said there at all from the Australians either. Additional tightening may be required to return inflation to target, i.e. slight uptick in interest rates, which is possible. So nothing else overnight apart from New Zealand, basically. Inflation too high in New Zealand. Again, all this stuff, you know, inflation is too high, continues to be too high, yet you've frozen your interest rates. The only way you're going to get on top of it is increasing interest rates. So again, New Zealand is dropping the ball. They've done this a few times, so have the Aussies. But we'll see what happens. So initial reaction obviously was down. Japanese news, that's it. So there's your overnight news. So 1:30 this afternoon is the biggie. 9 o'clock, obviously Bailey, we need to be aware of as well. Right, how long got to the open? 2 minutes. So today's gaps, obviously, quick gap fill to the downside. Likely we'll get that done on a spike. We're so close to getting that done. Not a massive amount of upside potential in there. That's the proper target today, which I'm not sure the market's going to have enough oomph today. at the open to do this today. So I don't think we'll get a 125 ADR hit by CPI. But we will see. Stranger things have happened. But yeah, so that's the play on the DAX today, is to basically start working our way back up to there. So if we get a pullback today down to here, be good buying opportunities for a push. So we will watch what happens there. Morning, Stevie. Morning, John. ADRs and stuff overnight. Obviously, we've had some movement on the New Zealand. But as you can see, not a lot of reaction at all. Market really not that interested in the New Zealand dollar news at all. Aussie dollar has moved, but it's a spike and a retracement. That's all we've had. So nothing there. No ADRs today yet. We've got some weeklies. We'll have a look at those in a minute. But we'll watch the DAX first. Let's see where we go. How long we got? I need to put my timer on here. We've got 1 minute. So 1 minute to go to the open. Might as well quickly whiz through these, actually. So weeklies, Euro Swiss, hit to the downside. Long on that already from previous RSI extension. So there's potential long. Obviously, there's a good opportunity for a long there. That's a nice monthly support we're just tapping into as well on this Euro Swiss. Lovely level that. Targets all the way back up there, that propulsion. We've got the Euro Yen. Again, big hit to the downside. Nice extension. Weekly hit. We're only on Wednesday, don't forget. So these weekly ranges already hit by Wednesday. Always good for reversals. Pound US dollar, massive hit to the upside. Again, this could all come crashing down with the US dollar strength this afternoon if we get higher than expected CPI. US dollar Swiss, opposite, hit to the downside. That's a real tank, that is. So that's a lovely opportunity for a long. And US dollar yen. Big hit to the downside. We know what's going on with the yens. They are still struggling down. Swiss yen I've just got out of this morning, by the way. There we go, market's open. So just got out of that Swiss yen. So flat on the Swiss yen now. Right, short on the DAX. God, look at that spread this morning. Wow, that was big. And a bit of slippage as well. Nice. So yeah, short on the DAX. So that's probably your gap. Not quite filled, actually, don't think, is it? Not quite, but tapped into. Managing trades on another platform. Okay, pull back up inside the pre-market opening range. Bear with me a sec. Got multiple accounts I'm trying to manage at the same time. So I don't seem to be able to operate a mouse this morning as well, which doesn't help. I have one of those mornings. Having one of those mornings. There we go. Right. So DAX back inside the opening range. So this is your pre-market 15 and your pre-market 5. So all we've done is tapped outside so far, sitting back in the middle. Not a massive amount of volume at the open by the looks of things today. Very little volume. Morning, Amy. Morning, Outro. So let's have a quick look at downside targets today on the DAX as well. If we are going to go short. So if we are going to go short beyond the gap fill, which is obviously yesterday's high. So basically we closed on the highs yesterday. So nice big rally. If we are going to go short, there's not really any obvious targets to the downside that we can aim for down here, apart from previous day's high, which wasn't really used at all yesterday. But that previous day as well, this area here is a previous resistance area. So this propulsion gap at ADR is obviously yesterday, previous day's high. So that could be our downside target today if we're going short. The open yesterday obviously is here as well. So sometimes the market does react at the previous opens, but more likely support resistance areas. So be looking for an ADR hit to the downside. That'll be a nice pullback, which will power up for a new long. But I don't think it's going to do anything until this afternoon by the looks of things at the minute. Okay, so there's your gap fill done. So we'll see if this holds up. If it doesn't, there is a potential area there as well for support, but see. Big lackluster, isn't it, today? Break's good, so we'll see if it holds, see if it keeps going down. But short at the moment. Got 59 seconds to go until the 5-minute ORB is in. So there's your 5-minute opening range at the moment. So if you want to take a break of the 5-minute range, obviously that's where it is. Break long or break short from there. Morning, Steve. Right, let's have a look at the FX pairs because that's not really doing an awful lot today. So weeklies we've covered. US dollar yen is the most extended thing on the weekly ranges at the moment. Obviously from that drop there basically, which is 368 pips. 271 is the weekly range on that. So at the moment it's massively extended. It's close to ADR today as well. So we've had multiple ADR drops on this. All these yens basically absolutely collapsing at the moment. So gone long on all the yens at the minute. Well, the EA has. No, it hasn't actually. Sorry, that's a lie. It's gone long on 5 of them. We're out of the Swissy, as I said, now as well. So that was the initial entry there. And obviously we went through that multi-week squeeze, accumulation drop. So flat on that one. But there is an opportunity coming up potentially if we get more movement down to jump long on that one as well. So all the ends basically are very extended now. So looking at the RSI dash at the moment, obviously you can see down here, the US dollar massively extended to the downside at the moment. But the US dollar yen is probably the biggest thing at the minute that's extended on RSIs as well. So on the 4-hour RSI, we are down below the 80 level, 80-20 level. So these levels, when we get to them, are real exhaustion points most of the time with the 4-hour RSI. As you can see, we normally get a nice big kickback off of these levels. 1:30 this afternoon, we've got the potential for a higher than expected CPI figure. And if that happens, obviously, we're going to get a massive rally on the US dollar, probably 100-200% ADR. So easily this could be all the way back up 50%, not so much 50%, but probably at least 38 retracement on that move. So extended on the hourly and extended on the 4-hourly. Nicely embedded here as well. Little bit of divergence on the RSI, not particularly good, but it is bullish divergence. So my target on this US dollar yen is this propulsion gap. 3 positions on now in 2 days as well. So it shows you how hard this has been dropping and how fast it's been dropping. So target that propulsion gap, which is basically there, which is 50% retracement pretty much on that move. Outro, my Forex funds doesn't show gaps. No, because my Forex funds, like E8, shows broker data. So it will show you data from, basically you have an hour at the swap where it's not traded, and then it just shows you forecast broker data. So you don't see the gaps. Whereas Robo Forex actually only shows you market open data. So on here, we are seeing exchange open. So the Frankfurt exchange opens at 7 a.m. The bell rings at 8 a.m. for trading to start. So that's where the market closed yesterday. That's where the Frankfurt exchange, electronic exchange, opens at 7 o'clock. That's the gap, which is basically an inefficiency in the market, which is why gaps get filled. That's why we play gap fills, because they get filled. But if you can't see them, your broker, your broker is showing you broker data. You have to basically go back to yesterday and just look at where it closed. So if you go on to EA, for example, yeah, that's the period separator. So that's basically your gap. So opened here. That was where it closed yesterday. That's your gap. Okay, so quarter of an ADR. We have moved. Nice big dump out the lows so far today. Right. Break even DAX short. Yeah, break even if you want to on it. You might find this pulls back though. If we are going short, you're going to do market structure, aren't you? So if you break even, you probably will. If it's going to run, but if it's going to go parabolic, you'll be fine. But if it's not going to go parabolic, it is going to pull back, which means you're probably going to break even. Break even's better than a loss. Right, Aussie dollar yen. US dollar yen covered. US dollar Swiss. Again, massive extension on this one. 4 hour hourly. Big drop. Obviously from another instrument. So this one basically, if you look at the 4 hour, I drew this line in yesterday, which is a daily level. Yeah, so this level here is back in November 2020. So that is the next support we've got coming up. So we've broken out of the lows, like dropped out of bed completely out of those lows, not interested in testing them. And that's our next level of support. If that breaks, I'm not even quite sure where you're going. To COVID, basically. No, that's 2014. Oh my God. Right, so that is the Swiss franc cap removal back in 2014. So there is no support. If this level here doesn't hold today, we are in uncharted territory on the US dollar Swiss. This is the lowest the US dollar has been against the Swiss franc pretty much forever, basically. So watch this level carefully today. We are very, very close to it as well, like 16 pips away. So there's a potential good long opportunity here. There's always a massive question mark when you get down to an old level like that as to whether or not there is even going to be any interest in it. Yes, people were buying it back there in 2020. That was kind of 6 months after COVID, just coming out of lockdown. Things were completely different. There's not really any reason for the market to set a load of limit orders there, apart from the fact that they can see that level. So it's whether or not the market has decided they would like to buy that level or try to buy that level again, as to whether we'll get a reaction. If we don't get a reaction there and it keeps coming down, we're just going to need to wait for them to take a profit on that move that they've created. So very nicely extended. I've got 2 positions on this because, again, it's been dropping so hard. There's not been many reversal alerts to get you in. So nicely extended. Again, we're in the hands of CPI with the figures. So if the figures come out green, we're going up. We'll be out of that. Not necessarily today, but should be out of that in the next couple of days if we get green figures. If we get red figures, that's going to be the test. We'll see how far we're going to go. But it is already massively extended, as you can see. So we're down to the 20 level on the hourly. On the 4 hourly, we're way below the 20 level. Yeah, so it's big, big, big extension. This kind of extension. Yeah. Big, strong move. We need that retracement. We've got the news catalyst to do it this afternoon as well. So I'm really hoping we get positive CPI. If we get positive CPI today, we're going to get the perfect storm of everybody that has shorted this and has a massive P&L panicking to get out because they've got positive news on the US dollar, which means people will be buying the US dollar. So you've got the buyers, new buyers entering the market on the news. You've got the old sellers exiting their sells, i.e. becoming buyers, because they're worried about losing their P&L. So that creates a big, strong reaction to the upside. So reliant on that figure today. We'll see what happens if we get a negative. We'll have to deal with that when we deal with it. US dollar CAD, nicely extended. Again, this is going to be a tricky one today. I've got one long on this at the moment, which is in profit off the support bounce. So reverse alerts got in this one on the hourly RSI extension, 4 hour. There we go. So there's your hourly RSI extension this morning. 5-minute reversal alert went in there. So that was the entry. Cool, nice little spread on that this morning. Since then, obviously, it immediately tanked. You've had another entry there off support. Look at that support and how that support's held up. Look, beautiful. So this is an old weekly level. Look, there to the pip, to the pip, to the pip. This just shows you the power of algorithmic trading that the banks use. Yeah, they bought this level, this level here, this black line, which was last week's low. Yeah, so this is the lowest point of last week. They've come down to it. They've bought it. Bought it. Bought it. This here is algorithms kicking in at the exact price we closed at last week. Just literally buying every time the sellers enter that level. They just buy it. They're just programmed to buy it. Just keep buying it. Doesn't matter how much money. If they chuck 25 million, you chuck 25 million back. Just buy it there because we don't want to go any lower. Just how it works. That's what's going on under the hood. The estimates are at the moment, I think, the last estimate I heard anyway, was about 85 to 90% of all bank trading is now completely algorithmic. Obviously, the traders are telling the algorithms what to do, but that just shows you how it works. And when you look at the futures market and you see all the orders placed into the futures market, because you can see them in things like Bootcamp and Jigsaw, you can see the algorithms just bouncing off, and you see the big bubbles appearing as the orders are getting put into the market. It's incredible to watch, but that's exactly the same that's happening there in the US dollar CAD. So we bounced off that low. So one entry long, hourly RSI extension. Again, this is going to be a very tricky one today. We are bearish on this US dollar CAD, incredibly, based on obviously the oil prices, but both of these do a lot with oil. This afternoon, we've got US dollar and CAD news. So if we get positive US dollar news and negative Canadian dollar news, we're going to see a big move on this, probably 200 ADR. We'll be all the way back up here somewhere this afternoon. If we get obviously positive US and then positive CAD, i.e. the interest rates go up on the Canadian dollar and the market reacts positively to it, we're probably just going to see some sort of whipsaw down here. And obviously there's the opposite. We get negative news on that and positive news on the Canadian dollar, in which case that's coming down hard into last month's low, which is 150 ADR. So deal with it as you see fit. If you are in this, if you've got the market reverse alerts EA, you're probably in this because it would have taken the same trade. If we're sitting somewhere up here this afternoon at 1:15 when that news comes out, I will probably break even this or decide whether or not I want to bank it depending on what's happening today. So at the moment, I'm targeting kind of these highs here, which is 150 ADR. If we're sitting somewhere up about ADR and I'm sitting in $200 or $300 of profit on it, which is going to be about 0.25%, close it. Just take the money. It could fly, obviously, and you could make 0.5% to 1%. It could also completely go the other way, in which case then you're either going to get absolutely nothing or go into drawdown. Bank it. If you've got any green in your P&L before massive news events come out, always stick it here, because if you don't stick it there, you could either lose it by going break even, or you could go into drawdown on it. Yeah. If you bank it, it's yours. Yeah. Worst case scenario, obviously it goes up and you could have made a lot more on it. But what would you rather have? A load of drawdown or nothing, or actually have money and the chance of going, into more profit. So it's up to you. But if something is in a decent profit before a news event, it's always worth sticking it in the bank. New Zealand dollar yen, nicely extended to the downside. We've just got the extension and the initial entry on that. So you're going to find a lot of these are yen based, these RSI extensions. Just quickly look at what the DAX is doing. Not a lot. We are short still, but looks like they've bought that high. So this is a support resistance bounce, basically. Resistance, support. They just rebought that support. So see if we got any more sellers on board, but that could be lower today. If we're going to go long and do this gap fill up there, got to bounce somewhere. So this at the moment is an outside bar, which is indecision. Not directional, it's just an outside bar. It means that the sellers have tried, the buyers have tried, neither of them has succeeded at the moment. Obviously, this candle's not finished yet. See where that finishes up. Right, New Zealand dollar yen, yep. So massive extension to the downside. We know all the yens are on a massive multi-day pullback, which is what we've been waiting for weeks. So brilliant, but we are now extended. So this move, they will need to take profit on it and then start another leg down at some point. It's whether or not we get enough move to actually get out of the positions, whether it decides to go parabolic the other way now. Possible. Don't think it's that likely, but as I said yesterday, I think there is a little bit more downside on these yens. I think there's a bit more strength left in it, but this could well flip this afternoon. If we get a big change in US dollar sentiment this afternoon, I think the yen sentiment will change along with it. So the fact that it's been strong means it will turn weak. So we could find all the yen pairs pulling back, which would be great because they're all obviously going to profit. But that is nicely extended, as you can see. 4-hour RSI extension is down below the 80 level. Again, really big extension. Yeah, when we get these massive extensions over the 80 levels, we tend to get those nice big moves. You can't see these, but the RSI is extended down there as well. Yeah. The 80 level is fantastic on the 4-hour. You won't get anywhere near as many entries on it, but the 80 is really like that's a big strong move. Yeah. So again, it's the whole jittery thing. If you are short on this New Zealand dollar yen down here and you're still holding it, every little candle that goes that way or every price movement that you're watching that goes that way reduces your P&L. You've got a huge lump of money sitting there, and every time something pushes up, it goes down. Yeah. And there's just that, it's just that human need to take money that will suddenly drive a load of people to hit the button at the same time, which means everybody will see that and everybody will then do it. It's that self-fulfilling prophecy. So we're just waiting for that to kick in. Needs a catalyst, needs somebody to do it. One of them will, and as soon as one of them does, the sheep will follow. So that's a nice extension on New Zealand dollar yen. Pound US dollar, very much the same thing at the moment, opposite direction. We've got strong pound. We've had a massively weak US dollar, obviously, and the massively weak US dollar running up into this CPI figure. Just got to the 80 level. Again, looking for that pullback. We're miles away from the 24 moving average, so some kind of pullback on this one. I've got one entry on this from yesterday from an H1 M5 mean reversion in there. After that big strong push, just about got the entry on. So looking for a pullback. Now I've got a bit greedy on this one. I'm not going to hit this today, obviously, but the TP's down here on this propulsion, sitting on top of this propulsion gap. This is probably more realistic. In fact, I'm going to change that today. Stick it in the middle of there. So this is 150 ADR. So again, if we get the positive news on the US dollar, this is coming down. Yeah. So 150 ADR on a news event is easily achievable. That is where I think we can probably get down to if we get a continuation push on the US dollar. It's whether, that's a multi-day hold. So probably not going to do that, but that's an easy target to hit. So nice looking short. You've had a reverse alert on that one this morning as well. Nice M pattern. So there's your reversal alert. There's your retest. And obviously we've retested again. So market structure is very nice on this one. High, low, lower high, lower low, lower high, lower low. Perfect. Textbook. So yeah, going very nicely to the downside. But obviously all of these US dollars totally dependent on CPI this afternoon. Pound yen. Again, big strong push to the downside. All the yen pairs got out of this one on Monday. It's pushed down yesterday and today, but not massively pushing down. Nothing compared to that massive push that we had on Monday. So yeah, it's extended on the 4 hour, but only just, not really far enough for me. This is bullish. Pound is bullish. Yen at the moment obviously is bullish as well, but yen is not going to remain consistently bullish. So the bias on this will still be long. Bailey's talking in half an hour, so you could find this suddenly goes in half an hour. We're expecting Bailey to come out today and reconfirm the 0.5% increase in August. He could come out today and talk up 0.5% August, 0.5% September. We haven't heard yet what the rest of this 0.75 or 0.5 to 0.75 increase after August is going to be and how it's going to be made up. So we're waiting for that information. We might not get it, obviously, but if we do get it, obviously it's going to be bullish for the pound. So bear in mind that's coming out 9 o'clock. May or may not get any movement on it, but that would be a nice entry off the 24. Yeah, in a trend, the 24 acts as a nice support. Then the 72. So entries down to there and back up. If it's gone all the way down to there, that's going to be massively extended. It should be ready for a ping back. So it's only just got extended. Not a particularly great entry. I don't think that one, but signal. Pound CAD and Euro US dollar. Again, these are 4 hour RSI extensions. Just about. They're coming out of extension actually. So the pound CAD, I'm already short on this one from the H1 back here. Sorry, back there. No, that's an old trade. Got that one. From here. Had an exit on that one, but didn't get it, obviously. So pushed up 3 entries on this one now. Come off the monthly resistance. Yeah. So, beautiful monthly resistance bounce there. Straight up into it. Rejected instantly yesterday. And now we're just sitting there. So looking for a profit take move on that. Pull back to the 24 if we're going to continue long. So short on it. Target is here at the moment, which is this area there. If you look at it on the hourly, you'll see why it's targeted there. We've got a nice propulsion gap there. That one's kind of done. We've got this old one back down here. But if this is going to remain bullish and the market doesn't react positively to the Canadian dollar increase this afternoon, you just be looking for a pullback and then some kind of rally. So that looks good for shorts, nicely extended, but obviously that entry would have been last week as well. Euro US dollar, that's a 4 hour RSI extension as well. Again, this one, you're in the lap of the gods this afternoon with the CPI figures. Euro is bullish. Dollar may become bullish this afternoon. We don't know. So looking for a pullback back down to here, above that high, that sort of area in that propulsion gap. But yeah, only got the 2 positions on that one. The first entry on that one was an H1 RSI extension back from Friday last week on that big rally. And obviously all we got was bought up that propulsion and off we went. So just waiting for them to come back down into that area. Euro yen. So again, this one's massively extended. Didn't manage to get a reversal on that this morning. 107. didn't get that on, 66. So it's just over half an ADR. So I didn't manage to get another position on that one this morning, but got one long on. Yeah, just looking for a pullback on that. It's extended on the 4 hour, big extension on the 4 hour, down below the 20 level. Yeah, Euro should be bullish. So waiting for that move basically back to the upside. There is a danger of this yen remaining powerful. And again, it's going to have a lot to do with what happens with the US dollar this afternoon. But if it does remain powerful, there is potential to need to scale in all the way back down to this potential resistance there. So there's absolutely no resistance through that level. We pulled back into this level here. This is kind of where we're sitting at the moment. So if it breaks this level and we do get more continued strength in this euro yen, there's no real technical levels at the moment for us to go, right, well, that's probably the next place we're going to look for a bounce. That's the next place, which is below that monthly low. So it's got potential for a big drop if it doesn't rally, but looking for it to basically just pull back on that move first of all. That's euro yen, euro pound and euro Swiss. So euro pound, yeah, down at the monthlies. This is a tricky one, the euro pound. Technically, this is a long against a long, but the pound is so much stronger than everything at the minute. We're the only country at the moment that's saying, yeah, we're definitely going up with the interest rates, and yeah, we're definitely going up by at least another %. Everyone else is being very woolly, so the pound is getting a lot of love at the moment. So the euro should be getting a lot of love, but Lagarde is being very, very tight-lipped. So it's coming down. We've got this level here, and obviously there's always the Ukraine problem at the moment, which is holding the euro back. But we've got this level here, this monthly, which we've tapped into. We've just swept that level now. So this could just be a run on liquidity down here before they pull it back up into the 24.72. And we're going to start to go into some kind of accumulation. But that's going to require the euro to strengthen up. We haven't got any news on the euro coming for a good couple of weeks. We know that in August, at the beginning of August, we've got an interest rate rise coming on the pound. So I can't see any reason why this should massively spike up at the moment. It's a little bit extended on the 4 hour, hourly was extended, but it's one of those pairs you can see on the chart here. Long there, 3 positions, single long there, single short there. It's one of those pairs which is just really rangy, tight, and you can get in and out of very, very quickly and easily when it does get extended, because for it to get extended is a big stretch. So every time you do, it's quite a nice, easy in and out. It's not something that really ever squeezes. So it has done, but not dramatically. So not extended at the minute enough for me to get interested in it. And the Euro Swiss, let's cover this one, then we'll go back and look at the DAX. So this is a beautiful spot, this Euro Swiss. So we extended on the below the 20. This is a lovely monthly level. So we looked at this one yesterday. We've got this monthly low from last month. Then we've got this monthly low from the previous month. The week before that, we had that low in there. And then obviously the month before that monthly low, that week before, we had that low there. So this whole area here is massively supportive. So we've tried multiple times to sell through this zone. Haven't managed to do it. This is our first retest of that area. Nicely extended back down in here on the 4 hour, monthly. Big stretched move from last week, from Friday. From yesterday on that Swiss franc power. So yeah, really good looking opportunity for a long here. Got 2 positions on this one. One from yesterday, one from, actually they're both from yesterday, aren't they? Yeah, both from yesterday. So yeah, just looking for a pushback up to at least retest this area. But if you look at it on the higher time frame, potentially this is a nice little support. So we did bounce. We got back above the 72. We haven't managed to challenge that high yet. So market structure is still short. Yeah. So if we do get that lower low in, that's where we're going to pull back from. So nice looking area to get in long on that one. Aussie dollar Swiss has just hit ADR, hourly, RSI extension and embedded. So looking good. Aussie dollar Swiss, So we got strong Swiss franc again, or is that Australian dollar weakness? This is Australian dollar weakness. So at the moment, the Aussie dollar is coming down hard. I'd imagine the New Zealand is as well. Yeah. So New Zealand dollar weakening off the back of the interest rate rise. This is kind of what I feared. It's not enough. That 5.5 is not enough. They need to be doing more. Their inflation is far too high. It's not coming down fast enough. It's nowhere near their targets or their projected targets for what they wanted it to be at this time. And they haven't put the interest rates up again. I don't know why they do this. The Australians and the New Zealanders and the Aussies, they keep doing this. They keep thinking, oh, well, we won't worry about inflation at the moment. Then they suddenly see their unemployment flatten from what it should be doing, which is going up, which is unemployment going up, drops inflation. The way you do it is by increasing interest rate and stopping people from spending money. It's not having the desired effect at all. So you just need to keep doing it. It's like batting them and going, wait, stop spending money. We're going to put your mortgages up. Yeah, we're not going to pass on the savings rates to you. They're not listening. You need to do it more. Otherwise, it's just going to continue spiraling. So as long as that happens, market's not going to be happy with it. It does mean that we should be getting higher interest rates on the New Zealand dollar. Yeah, but we've got a month of now not having higher interest rates on the New Zealand dollar, at least. Sometimes they release them, longer term than that. So not looking good. Whether or not it drags the Aussie down or not, we'll have to wait and see. But those are all coming down at the moment. So Aussie dollar Swiss, your first ADR. This has come off a monthly level as well. So this is a very nice support, previous support. Again, that's our bounce, which we got very nicely, but straight up into an area of balance, which is immediately rejected and driven it straight back down there. So I suspect this probably will break to the downside. So wait for an RSI extension on it. If you want to take the ADR today, take it. There you go, Euro odd ADR. So that'll be Euro extended to the upside against the Australian dollar. Okay. You can take these, obviously, but bear in mind, this is a reaction to news. News spikes will be 150, 200 ADR. So this is the New Zealand dollar interest rate. This is London reacting to it. This could well continue to go down. It might bounce from here, don't know, but just be careful. You're probably better off waiting for RSI extensions. People keep mentioning this to me. RSI extensions along with ADR. This is a prime example of not taking an ADR because you haven't got an RSI and only taking ADR extensions when RSI is extended. You've got double the confluence there. So yes, there is a lot more chance, isn't there, of a pullback starting from there, because not only are we extended today, we are also extended on a multi-day move. So the chances of a pullback happening are much higher. You're just going to find you're going to get less opportunities on them. So, but that's nicely extended. Aussie dollar Swiss. Whoops, on there. So Aussie Swiss and Euro odd. Euro odd, again, there's no other news catalysts on this. You've got some nice highs coming up here. So if you take an ADR reversal, you've got potentially a 125 bounce and a 150 bounce today. Obviously, just drop down M5, wait for the reversal alert. Don't just get in because it's extending on ADR. Get in when the market reacts to the extension. DAX has pulled all the way back up inside, back up to the opening range again. So this level has been bought. And we don't appear to have any sellers on board at the moment. So we'll see. But see what I mean about that outside bar when I was saying this this candlestick that we had was an outside bar. Outside bars, regardless of, a lot of people will look at this and go, hey, it's a bullish engulfing. It's not. You need to look at the wicks. It's an outside bar. It's indecision. The sellers could not take control. The buyers could not take control. Yeah. No one is in control. Wait for the next candle. Inside bar, indecision. Yeah, there were not enough buyers to challenge the highs. There were not enough sellers to challenge the lows. Next candle, Bullish, higher high, higher low. Buyers are in control. Yeah, so outside bars, indecision. Inside bars, indecision. Just because something's got a bullish engulfing on the body doesn't mean anybody's in control of that market. So we're pulling up into there. So this is a 50% retracement on the entire move of the day so far. So we'll see if we're going to get a continuation to the short. If not, the play will be to flip long and go for the gap fill. Which is 159.22. And from there, obviously, it's ADR 125. Second target, which is 160, 160.30. Right, where are we? So last couple, CAD yen extended massively to the downside. One position on this taken yesterday, initial entry, still going. So just waiting for some kind of pullback. This is a massive run for the yen. Really good run for the yen. So we should get a nice pullback and profit take on that. Tons of propulsion gap targets to the upside on that. So not particularly worried about that one. That's also massively extended on the 4-hour, embedded. CAD Swiss, again, nice extension there. This one's not stopping. So just done some drawdown control on this one this morning. That entry there, just taken third of that one off. Got 3 positions on it now. Extended and embedded on the 4-hour. Hourly RSI extension, you can see, was there. That was the first entry on this RSI extension. All we've done was an accumulation drop, accumulation drop. We're now in another accumulation. So RSI constantly touching the low levels as they're continuing to push. Aussie dollar CAD ADR. Aussie dollar is falling out of bed completely this morning. Yeah, drop down. If you're not in this and you want to get into it, drop down M5, wait for the reversal alert, which is going to be really tight. You will have had one actually there. There would have been a reversal alert off of that candle there this morning already, which came off of yesterday's low. They've just taken that low out. So that is potentially, when you get the reversal alert here, that is potentially the start of your W pattern reversal. But 3 positions on that at the moment. Massively extended. So 4-hour, obviously now we're down below that 20 level. This is obviously on the cards today with the Canadian dollar. If we get the rates, if the rates don't go up today, highly unlikely, but if they didn't go up today for any reason, obviously we will be finding ourselves down here this afternoon, at least down here. So obviously we'll be adding, but the most likely move today, as we are increasing interest rates, is a Canadian dollar rally. So we should be able to get out of this one, hopefully today, tomorrow. If the CPI figures also come out positive for the US dollar, we will have moved up before we start the Canadian dollar rally. So that may well be within reach today, but we will see. As you can see, everything against the Swiss franc at the moment is weak. All the US pairs, all the US pairs, the US and the Canadian pairs, weak against the Swiss franc. But we'll flip at some point. And obviously now we've just broken that 72 level. That is a trend shift. So coming back up to retest that area at some point is probably on the cards in the next few months. CAD Swiss is done. And last one is Aussie dollar yen, which we know about. First entry taken on that one yesterday. So your 5-minute reversal alert was in there yesterday. And we've not gone anywhere today. Now we're coming down, obviously, Australian dollar weak. So again, if we get that continued strength on the yen, obviously this will come the perfect storm, the Australian dollar weakening and the New Zealand dollar weakening with the yen strengthening. This will get double the power. So maybe looking to come all the way down to there. But I mean, it's not going to get all the way down to there without doing some kind of pullback. So just waiting. There you go. There's all your RSIs. Lots of them. Lots of opportunities all over the place today. Morning, Amar. Morning, Nicholas. Burke, I'm really stuck on the euro odd short. How are you in a euro odd short and not out? So if you got in from there, which I can see is probably, or there, potentially, you should be out. How are you stuck on a euro odd short? Last time couldn't exit for 10 pips, and this morning for 30 pips. Pass. I mean, you've had a huge week drop. 5 days on the trot. Look, yeah. ADR on this is 132. You dropped 3 ADR. How did you not get out? Don't know. But yeah, I mean, there's loads of downside targets on this, but the Australian dollar's just weakening on the New Zealand. So this could double top. If you're worried about it, scale out of some. So if you know this is pushing at the moment, if you're worried about it going further, I don't know where your positions are, but take some size off. So you know, drop a third off of 2 or 3 positions, take some loss, reduce the pain, bring your average up, and get an aggressive drawdown control position on if you need to. So when we get up to this high at 125 ADR, which is yesterday's high and the previous day's high, that is a spot on aggressive drawdown control spot, isn't it? Look. Yeah, we pushed up and rallied to that high, which created a lower high on the monthly. We double topped it twice there and rejected. We've pushed back down, double bottomed on the previous day's low. Now we're rallying back up again. If we get back up to there, assume you're going to stay range bound, get an aggressive drawdown control position on and try and get out if it stays range bound. Actually, I couldn't manage nicely that position. Are you not using the EA? If you're using the EA will be doing all this for you. That's the point of the EA. Yeah, if you struggle for time and you can't manage the positions manually yourself, that's why I built the EA. You don't have to think about it. If you want to get in half an ADR, 3/4 of an ADR in between your trades when there's an RSI extension, it just does it all for you. None of this is done by me. This is all done by the EA. Unless it's an aggressive drawdown control position, obviously then I am doing it. All the drawdown control is done by the EA. Everything's done by the EA. The only thing you need to do is watch your P&L. If you've got the EA, watch your P&L and keep an eye on anything that may be getting out of control. And then we deal with that. Pound odd at the moment is at 1.1%. It's not out of control, but it's the thing that is the deepest drawdown at the moment. So that's what I will keep an eye on. Everything else is just being managed. So if you're not using the EA, use the EA. Let it do it all for you. Then you won't have to worry about managing it. But that's what I would do on that one. Watch those highs. Watch that high as well. So if we hit this 125 ADR today and it just hovers around and it pushes above that high, if it gets up to 150 ADR, which is the previous month's high, I would wait for a reversal and get an aggressive drawdown control position on there. Because if it gets all the way up to there today without a rest, it's going to need one. You're at least going to get a 50% retracement on that move if it's going to go higher. That is if. Yeah. This Australian dollar move that we've got going on at the moment may not be sustained. Yeah, this could just be a temporary drop and a bounce. Not going to be good for the New Zealand dollar, I don't think, moving forward based on that interest rate. But It may be. It may not. It may not be dramatic. You know, look at what happened last time with the Aussie, yeah, with the New Zealand dollar. Yeah, I mean, this is ridiculous. This was an interest rate as expected. Total overreaction to the market. The market had to recorrect itself because it got it really wrong. This new one we've just had, I would hope they've got it right this time. So yes, it is frozen interest rate. So as expected, we should see New Zealand potentially power up slightly on it. That's what normally happens. But as I say, at the moment, we're not seeing what we normally see with fundamentals, are we? Because everything's completely out of whack. DAX is pushing up. I think I may have just got hedged. Not quite. So pushing up into back into the opening range. So he's straight back into the open. I think we might pull down a little bit from there and just sit around until 130. Why do you not like 8 cap? Just because the market execution and the spread is quite bad. But if you're not trading M5, it's not a problem. Use them. I just don't like them because I've had bad. I've traded with them twice. I've had bad experiences twice. You know, I've tried twice. They're crap twice, so I don't use them. And if there's a prop firm that isn't offering anything super special that uses 8 cap, I won't use them because there's lots of prop firms that don't use 8 cap, like my Forex funds and EA, who have better trading conditions. But if 8 cap are amazing now, fine. But every person I speak to that's using 8 caps backs me up and says, yeah, they're crap. So that's the only reason I don't like them. Nothing against the company. Just if I'm scalping on M5, I need my orders placed like that. And I need tight spreads. If they don't provide that, I can't use them, can I? That's the only thing. Nick, morning. Any alternative to my FX book? No, they're back. They're down. I'm on their website constantly. My FX book down. They've got big problems. This is why my website's down, by the way. So the sentiment, yeah, the sentiment's all drawn from my FX book. Can't get it. My FX book's gone. I don't know. It's been 2 days now. We will be back soon. Due to an electrical issue at the data center, we are currently experiencing website downtime. The data center is actively working on resolving the issue. You need to move data center because if there's a data center that's got problems with electricity and they're not using huge backup server generators, you need to switch. Quite important. Yeah, so because I was getting all of my sentiment data from individual broker feeds, and my FX book actually use all the same pretty much broker data feeds that I was using. So I decided just to use my FX book's feed, and it's not working because it's down. So other sentiment you can use is IG. If you want to use sentiment, God, I've forgotten it. FX. So you can use IG's one. They give you sentiment data. But that's obviously just IG. So that all you're seeing there is just one broker's sentiment, which will be different to other brokers' sentiment. But there's nothing much you can do about it. It's down. Hedged, sorry, on the DAX. That's bloody annoying. What drawdown settings do you use? So at the moment, drawdown, I'm getting out. The EA is scaling out at 1.5 ADR. So I was using 1 ADR. Trying to find something I've just done drawdown control on. What's just US dollar yen? Yeah. So basically that's, if you look at that and measure it, it's 164 pips. ADR is 100. So about 1.5 ADR. 108 is ADR. So it's 1.5 ADR. I was using 1 ADR. Basically, my spacing is 3/4 of an ADR minimum. What I was finding with using the EA, because I've always done drawdown control manually, but I'm finding it's just so much easier with the EA, just to do it as you go. What I was using was, I'm still using 3/4 of an ADR spacing, which is what I've used for a long time. But using 1 ADR as drawdown control, what I've been finding, Euro Pound is probably a good example. No, I just saw something fly past that had 3 positions on it, which perfectly demonstrates my point. There. So if you look at this trade, so we've got 1 entry there, 2nd entry there, 3rd entry there. So if we measure the distance on this is 82 ADR. So the difference between position 1 and position 3 is 140 pips, right? So what I found by using 1 ADR as a scale out is, if you go into 3 trades, what often happens is, by the time you get to your 3rd position, you've done 2 drawdown controls. So you've taken, in this case, I would have taken about a $260 loss on that push, and then it pulls back. Yeah, the vast majority of my position trades are between 2 to 4 positions. So what I'm finding is I'm taking twice as much drawdown control automatically than I need to, because if most of my positions are going to be somewhere between 2 to 4 positions, why take 2 drawdown controls when I could just take 1? Yeah. So if I increase from 1 ADR to 1.5 ADR, what I'm going to do is miss out on one of those drawdown controls. This one here wouldn't have triggered a drawdown control, and the position would have got out. If it had got out there, it would have got out, firstly, in more profit, but secondly, my average would have actually been around about the same place. So I've just expanded it to 1.5 ADR. Still taking 1/3 of the position off, but just increased it a little bit. Just, it's all fine tuning. It doesn't make, in the grand scheme of things, because you always, virtually always will get out too soon on virtually every trade you take. It usually doesn't matter, because what happens is you will get out when you've got enough profit beyond your average. So by taking that additional drawdown control, all you're doing is taking a slightly more loss on a position, but you'll still get an out on it. And if you don't get the out there, you would have got the out there. So the difference between that and that is actually $130 worth of additional drawdown control that I didn't need to take. There will always be the case as well, sometimes, where that would have been my exit and it would have hit my thing to the pip, my TPs to the pip, and then bounced away, which means I wouldn't have got out of it, which means if I hadn't have taken the extra drawdown control, I'd still be in the position. You're never going to win. So it doesn't matter which you use. Yeah, personal preference. I'm preferring at the moment to take a little bit more drawdown and scale out a little bit slower. But if you are wanting to scale out faster and keep your drawdown lower, then put your drawdown control to be tighter, so it scales you out faster. But you'll find you will have trades with 2 positions. There's one here, I've seen it recently, with 2 positions on, which won't be a yen pair, which demonstrates drawdown control. I'm not going to find it. Yeah, see me, that one there has got 3 positions on, look. Didn't do any drawdown control at all. Yeah, so 145 ADR, that between those 3 positions is a 211 pip move. So I didn't need to do any drawdown control to get out of that. and it came way further down. So, but there is one where I'm just trying to find it. Trades. There you go. That's it. That's the one I was looking for. Pound CAD. This is a good example. Look. Yeah. So this is when I was using 1 ADR for drawdown control. Yeah. So ADR on this is 105. That move there is 108. So, I mean, I don't know what the ADR was then, but it's roughly around 105-ish. So took a trade, pushed up, took the second trade, an ADR away from the first one, did drawdown control on that, and then exited the position. There's absolutely no need to take that drawdown control. Enter the first, enter the second. The vast majority of trades come in 2, 3, or 4 positions. So all the ones that are in 2 entries with 1 ADR drawdown control are all taking a loss when they don't need to. So if you eliminate that $130 loss or whatever that was on that, which is roughly what a third of the position is going to cost me, all I'm doing is I'm taking tons and tons of $130 losses I don't need to. Yeah. Eliminate 10 of those a month, I'm making it an extra 1% gain on the account. It's a big difference. I will go into more drawdown though, if it pushes further against. Slightly, not a lot. Half an ADR's extra drawdown. At the end of the day, it's neither here or there, is it? But the difference between the average, yeah, doing the drawdown control there and doing the drawdown control there, the average is still going to be in the same place by the time we get to our third position. So it doesn't make any difference. You're just going to get some positions where you get into 2 trades, like that one, exit. If I'd have taken that exit, which I didn't, which was close. But if it had done drawdown control on that, it's just, you know, there's no point in taking the extra drawdown control, is there? Don't take the loss. That's the problem with the EA. You know, the EA will only do exactly what you tell it to do. So if it moves up by 1.49 ADR and then comes down, that drawdown control will not be executed because it's told to do it at 1.5. It's to the pip. You're never going to pick exactly the right thing on an EA. It's always there or thereabouts. Right, we're coming up to challenge the daily high. So I'm hedged at the moment on this. Don't like the look of this at all today. It looks like it's going to be a rotation day today. So if I'm going to get out of this trade with any kind of profit today, I need to close these longs out and hope it just reverses. But watch this level here. If we're going to do a rotation, we'll be seeing sort of price action like that. So what I might do, if this breaks this high, it might run as well, because we've got the gap fill. It's really tricky today. I hate trading ahead of news. It's so difficult. You never know if you're going to get a run or you're going to get a rotation, because there's an argument for closing the positions out here. Close the longs, take that profit, hope that we get a reaction at that high, which brings you back down to there. You close those out at break even. That's your profit for the morning. If it comes back down into here, it's just a guaranteed 2% loss because I've locked in 2% of loss because I'm hedged. Think about that. Watch that for a minute. Burke, not using the EA because I don't have a big account yet. Just entering 0.01s. Oh, right. Well, if you're entering 0.01s, then yeah, that's going to be your problem. You can't do drawdown control. If you can't do drawdown control, you're going to... This is why I say you need to ideally enter. I said this yesterday. You need to ideally be entering the market with 0.03s or higher. Because if you can't do drawdown control and you can't use any kind of lot multiplication, all you're doing is you're entering trades and hoping the market comes down. You can hope as much as you like. I've seen this go parabolic for a year. So you need to use bigger lot sizing. That's why you'll be stuck in that trade. Shroud. What's your outlook on EU and GU? Covered those already. Have a look at the replay. AZ, I know this question has been asked, but what would it take to have the market reversal EA in TradingView? Somebody to program it in TradingView. I just don't use it. Just use a VPS. You don't need TradingView. Can you imagine backlog? Can you imagine the backlog of data in my FX books will need to ingest to catch up? It won't be able to ingest it within post. It's missed it. They won't get that data back. Data's stored and recorded real time. Website's down. It's not storing and recording anything. Gone. The big gap. Gap in data. Nothing you can do about it. I don't think. Well, they won't be feeding it out anyway. I'm not the only one with my FX book problems. Yeah, no, everybody's got. Yes. I'm surprised it's that. I used to run a web design company, web design and hosting company. This is not acceptable. Yeah, some of the customers that we were hosting websites for and we built websites for were turning over $100,000 a day on their e-commerce stores. You go down for 3 days, that's $250,000 quid. You can't have this in server rooms. Yeah, you have obviously server racks and racks of servers. Outside of server rooms, you'll find these huge containers, like shipping containers, which are provided by Samsung, which are backup batteries, UPSs, uninterruptible power supplies that are not on the grid. When the grid goes down, these things kick in and keep the server room alive so that they can slow boot everything. If you just turn every server off like that without doing a safe shutdown, you'll have corruption issues, broken components, all sorts of crap. So I don't know what data center they're using, but I started a web design company 20 odd years ago. And even back then, they had backup generators in server rooms. I'd imagine they're a little bit more advanced than that now. Co-location, hosting, RAID array disks, all sorts of stuff. We had all that back then. It's not acceptable for a website to go down for 2 days, is it? But I don't know, maybe they're paying cheap hosting in Indonesia or something. I don't know. Yeah, crazy going down that long. US dollar Swiss went crazy. How do you mean went crazy? It's just pushed up. So yeah, just had a reverse alert on that and going up. I wouldn't quite call that crazy. It's just price action. That's a little bit more crazy. That's just a turn. This is tricky. Right, just trailing this. So this is tricky today. So I'm basically just trying to lock in some profit. So if I can lock in a profit on that trade, and my assumption is going to be that after what's that? 5, 10, 15, 20, 25, 30, 35, 40-minute rally with absolutely no sellers in sight at all, this thing's going to pull back. So what I'm trying to do here is basically lock in the profit that we've got here. And hopefully, before it reaches my stop, which is a quarter of an ADR away from that entry, we get a rotation back down. and I can get out of this with a tiny loss or break even. That gives me a break even for the session. If this continues to go, obviously, and it stops me out and carries on, that's the wrong decision to make. But this is half an hour now, straight up, no stopping. It's going to need a rest at some point. I'm just hoping I was hoping it was going to turn there, but it's not. So it'll go with me, but I'm going to stop out on the short positions. So not a lot I can do this morning. That's really all I've got for you this morning. So anything else you need, let me know. I will be in Telegram, but I'll be back at 2:20 this afternoon. So if you've got any other pairs you want to look at that I haven't covered, pretty much covered everything, so it shouldn't be. But yeah, so basically 1:30 this afternoon, CPI. So that's the main driver for the day. Bailey's talking at the moment. Let's just see if anything has come out of Bailey. Oh my God, who's this? They're having server errors as well. What's this? Russia. Shouldn't say that. So yeah, nothing coming out of Bailey so far that we are not expecting. So just be aware of that pound today. But 1:30 this afternoon is when it's all going to kick off. So we've got those CPI figures. Now, obviously, I say kick off. If it will only kick off if we get a very unexpected result. If we get all forecast results, you'll probably find that will happen. Not a lot. So we might get a move. We might not. We just have to be prepared for one. So we always say, this is a core news event, and there's a high probability of a market structure shift. There's a high probability of a big intraday move, ADRs, etc., etc. But those are only going to happen if the market is not happy with what it sees, i.e. it's not what it was forecasting, what it was expecting to happen. So if we get as expected results, that typically has just a slow positive reaction on the currency. So we'd see a little bit of US dollar strength. Obviously, same with the Canadian dollar. We are expecting an interest rate up to 5. If we get the interest rate up to 5, may not get anything. It might push a little bit for the day and then retrace. If we don't get a 5, it's going to go flying in one direction or the other. So this is all kicking off, obviously, this afternoon. So we'll obviously analyze what's happened to CPI when we come on this afternoon at 2:20, and we'll be trading through the Canadian dollar rates. Any opening range breakout trades you take today are likely not to work. So be careful this afternoon. 2 reasons for that. First of all, you will have had potentially a massive move on the US dollar at 1:30. So the stock market will tend to go the opposite way to what the US dollar does. So if we get a massive spike on the US, we might get a massive drop on the indices. If they've done an ADR today, there's not going to be any liquidity left at the open for them to put big opening ranges in. Secondly, they're not going to want to put big opening ranges in at the open when they've got a Canadian dollar interest rate coming, because there's likely to be massive volatility in the US dollar, which is going to drive the stock prices up or down dramatically. So we've got a market freezing event before and after the open. So be careful with the ORBs. It's entirely up to you. You may get a massive move off the opening range break because they might want to completely undo everything that's just been done in the stock market. I don't know what's going to happen, but typically we know, we've seen it many times. If you've had a large move on news before the open of the exchange, it doesn't go anywhere. It just does that. And you just get double-ended stop outs and lose money. So up to you what you want to do. But I'm going to run the demo account, basically, not the funded account this afternoon, just so we can watch it, see what it would have done, see what would have happened. But I'm not going to take, I don't think, any trades this afternoon. Also, if you're trading futures, be aware you can't trade through that. So make sure you're flat. Anybody trading futures accounts, otherwise you'll be told off. What happens to US 100 during CPI? Something's just answered that, haven't I? Goes mental. So basically, stock markets tend to do the opposite. So stopped out short. Stopped out on the shorts to the tune of 650, running in 476, locked in profit. So I'm going to make a small loss today, $200 to $300, unless this thing keeps going. You know, fine. If you want to keep going like this, I might survive. But I'm trailing this. What I don't want to do now is have that happen. Yeah, it's a loss on the short. I need to make profit on the long. I'm not going to make a profit today. I don't think it's going to be a couple of $100 down. So it's not the end of the day. End of the world at all, is it? But stock markets tend to go the opposite way. So when you see a massive rally in the US dollar, for example, yeah, so US dollar, Swiss, 3 down days, yeah? Dow Jones, up, 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 yeah? So you'll find that because the relationship between the US stock market and the US dollar is obviously all stocks in the US are priced in dollars. So as the US dollar becomes more expensive, stocks tend to go up. As stock prices increase, people sell them to make a profit. When the US dollar comes down, stock prices get cheap, so they tend to buy stocks. So you get the inverse happening to what is happening in the US dollar. It doesn't always happen that way, but that's the typical movement. So when you look at the Dixie, the dollar exchange, I've got the Dixie in here. I think I have. No. So yeah, if you look at the Dixie, which is the dollar index, you will find that typically has an inverse correlation to the Dow, and a lot of the times to the S&P and the NASDAQ, because a lot of the times the S&P and the NASDAQ will move in tandem with the Dow. Over the last 6 months or so, that hasn't been the case, though. We've seen a massive divergence across the 3 indexes. So if you look at the movement on these 3, yeah, so that's yesterday's open there. Yeah, see, we had a big drop and a push up, a very small drop and a much bigger push up on the Dow. So the Dow's kind of gone out of sync. Yesterday was actually one of the few days, wasn't it, that we had all 3 indices go the same way at the same time. A lot of the times we're seeing the Dow do that and the NASDAQ do that, or, you know, the Dow do absolutely nothing and the NASDAQ fly. And obviously the S&P will typically go, these two move in tandem. That tends to be divergent at the moment. So you can never tell. But that's the beauty of trading indices. You go with momentum. They're momentum instruments. So when you get a strong, fast move, you get on the strong, fast move. They're not good for mean reversion. They're a lot more difficult to mean revert. They're momentum plays, breakout momentum plays, which is why we trade the opening range breakout EA on them, to just go with the flow. That's the way to make money on the indexes. All right, that's it for this morning. As I said, just bear in mind anything you've got in profit. I've got nothing in profit to bank. Pound CAD is the only thing I've got that might be bankable. That position there. If that's kind of down here somewhere, I might take that off. But other than that, there's nothing for me to bank anyway at the moment. So if you have got anything worth banking, bank it. If you want to, entirely up to you. As I said, if the news goes your way, you would have made more money. If the news doesn't go your way, you've stopped yourself going into drawdown. Your choice. Depends how your day, your week, your month is going, doesn't it? So, but yeah, bear in mind, obviously, that's all out this afternoon. We'll reanalyze that when it comes out, and then we'll be ready to trade the Canadian dollar interest rates this afternoon. All right. So have a good day. Hopefully it's profitable. And if you need anything, I'll be in Telegram. Otherwise, I'll be back this afternoon at 2:20. If not, tomorrow morning, 7:50, same time for Frankfurt. All right. Have a good day.